Well, thanks to Marin and to Louis and Casey Research for inviting First Majestic to this event today. I'm Keith Nuemeyer, CEO and President of First Majestic. What you're looking at right now is our investment, our major milestone in 2011. This is a result of $40 million that we invested in the La Pria operation. This operation this mine was purchased in 2004. It's been expanded 5 separate times over that period of time. We launched this expansion at the end of 2010, and it's just coming to completion now. It's currently running at about 1,850 tons a day. Within the next 30 days, it'll reach its maximum capacity of about 2,000 tons a day. Quite surprisingly, right in this area here is the old 850-ton-a-day mill, which this mill was built right around. And during the construction period, we actually kept the operation running during the entire time. So the credit goes to our operations staff for being able to accomplish such a task. I expect you all to read this. Need more time? The First Majestic is actually the purest silver company in the world. 97% of our revenues from the sale of silver, which makes us quite unique. If you compare us to any other company, Silver Corp, Hecla, Pan American, you name it, we're absolutely the purest. Even we're more pure than silver wheaton, quite surprisingly. We have 3 producing silver mines in Mexico. Actually, all our assets are in Mexico. We have 1 project under construction, which we have a short slide on. And with our current, our 5th project in the permitting stage, with the current portfolio of assets, our production is actually going to double over the next 3 years, taking us up to approximately 16 million ounces of production. Unfortunately, I'm not doing this presentation tomorrow because at 5 a.m. In the morning, our year-end financial statements will be released, so these numbers will change fairly dramatically. But in the meantime, this is all I can give you. We have a market cap of approximately $2 billion, $90 million in the bank, 105 million shares outstanding. As you can see, we've got robust cash flows and revenues, partly to do with, obviously, the improving silver price, but also as a result of our growth that we've seen over the past 12 months. So we're spread around Mexico, as I said. We have 5 separate assets in 5 separate states. Our largest mine, the La Encantada, is in the state of Coahuila. The second largest mine, which is the photograph you saw right at the beginning of this presentation, is the La Pria in the state of Durango. We also have the San Martin, which is our smallest mine in the state of Jalisco. We also have Del Toro, which is our big construction project in mining-friendly Zacatecas. And our project under permitting is in San Luis Potosí, the La Luz Silver Project. So here we've condensed this presentation to make it quick. We put all 3 projects on one slide here. You see the 4,000-ton-a-day cyanidation facility in the La Encantada. It's producing approximately 4.5 million ounces of pure silver in the form of doré bars, and it's got a very substantial exploration project going on right now over a 4,000-hectare land package. This is a series of mantos and chimneys, so they tend to be quite high grade. The La Pria, which is where we just finished spending the money, the $40 million in 2011, will be producing somewhere around 2.6 to 2.8 million ounces of silver here, plus lead and zinc as well. Very, very large land package, almost 70,000-hectare land package. I should just note here, because all the resources that we've developed over the last 5 years at La Pria all have been within about 2 to 3 kilometers of the mill. This land has been owned in our portfolio for almost 5 years. We've never actually gone out and done regional exploration except since last year. We had 2 groups of 5 geologists walk this property, and we actually discovered 8 old Spanish mines about 10 or 15 kilometers away from where this facility is located. And we also discovered a very large anomaly that's looking quite interesting as well. So in addition to the 5 rigs that are currently drilling right now, or still around the mill area, we're actually deploying another 3 rigs in a regional way to do the first ever regional exploration on this property. So we're quite excited about that and excited about what's that actually going to prove to us, because we could end up, but this is elephant country, and it's quite conceivable that we could end up building another mill within 15 or 20 kilometers from this operation. The San Martin, we expanded that and improved it a little bit. In 2011, we replaced an old ball mill, brought it up from 900 tons to 950 tons. We also replaced the old induction furnaces with the latest technology and also replaced the precipitate filters as well. And you'll see the costs start to come down at that operation as a result of some improvements that we've made there just recently. The big story, or the story that everyone's waiting for, Del Toro. This was a series of properties that we bought over a period of a couple of years between 2004 through 2006. We drilled this out from 2005 to 2008. We put out this 43-101, which proved up to 56 million ounces of silver there. This report was put out, as I mentioned, at the end of 2008, and we've done since, we hadn't drilled since that period of time until late 2010. And since late 2010 to now, we've developed a much larger resource, and the market is waiting for this. The analysts are waiting for this. We're talking about a 4,000 ton a day mill here. This will be, in fact, our largest mine looking out to 2014. You see a bit of a drawing here of what it's going to look like. We broke ground in April of 2011 on this operation. We're now laying foundations. We will see some production from Del Toro this year. It'll be modest. We're hoping to see about 500,000 ounces of silver production towards the end of this year. But by 2014, this will be our largest mine, and this is suggesting 6 million ounces of silver equivalent. But as I mentioned, the new drilling will be put out in the form of a PEA here in the next couple of months, and I think you can expect these numbers to improve slightly. Here we go. This is the most important slide. The production here, as I mentioned earlier, is growing substantially. We'll reach close to 9 million ounces silver equivalent. And remember, we're a pure silver company. Over 90% of these ounces are actual silver ounces. So when I say 9 million ounces, it's about 8.2 or in that range of pure silver. 16 million ounces by 2014, and that doesn't include one of our permitting projects, which has a good chance of being in production somewhere around the 2014-2015 timeframe. And our resources, I touched just briefly on the fact that we haven't really drilled over the last couple of years. When the end of 2008 came along and the financial world was seemingly coming to an end, we started pulling all the drill rigs off of our properties. We actually had 21 drill rigs going in August of 2008, and by January of 2009, we didn't have a single rig operating. We didn't drill again until the third quarter of 2010. We've now been drilling for a good year. We've got 23 rigs active right now. By the end of March, we'll have 27 rigs going. We're spending $16.5 million on exploration this year. And I can tell you that these ounces will increase substantially over the next year and two. And these are good grade ounces as well. There's 200 grams silver, plus, of course, base metals on top of that. And our costs, this is something we're very proud of, and this is pure silver. Remember that because of our purity, we don't have the benefit of adding a bunch of base metals on there to create a much lower number. When we talk about our costs, these are actual pure silver or virtually pure silver costs, and these are the lowest or one of the lowest in the industry. And if you were to do that analysis, you will find that it is in fact quite amazing that we've kept our costs in line over this period of time. We actually did 2 site visits of 2 companies over the last quarter, and we found one company that had the mining costs of $105, and another company actually had mining costs of $85. Our mining costs are less than $40 a ton, and I think one of the biggest reasons for that is the fact that we don't have a lot of expats working in Mexico. All our staff in Mexico are Mexican. We don't use any expats at all in our operations. And when we go through the detailed costs of some of our peer groups, we find that a lot of the expats working in these foreign jurisdictions, in this case Mexico, they just don't do a good job of signing contracts or negotiating terms with the locals, and the locals actually take advantage of them, and we don't have that particular problem or concern. And with Del Toro coming on stream, which is going to be a low-cost mine, as well as the improvements at La Pria, we figure that we can keep these costs in line over the next several years. Of course, the margins are increasing substantially because of the silver price. And the correlation of the price of silver is something we're very proud of. We're actually the most tightly correlated stock in the universe when it comes to the silver price. Obviously, this is a double-edged sword. When silver is going down, obviously our stock is most affected. But in an environment where silver is improving, and we expect it will continue to do that, our stock performs very well, and even more so than silver wheaten. And this is to do with its purity, we believe, and its growth as well. And how the stock is, our symbol's AG, by the way, if it wasn't clear. SLV is silver. We've outperformed the silver price substantially over the last 12 months. And that was the last slide.
Okay, thank you very much. I'm supposed to ask questions, but I have to say, when he says they pulled all the drill rigs off in 2008, that's not as crazy as it sounds. They had 300 million ounces of silver at the time, and the market basically didn't care. So delivering another 100 million ounces of silver, which is a big deal, wouldn't have made any difference to them. So actually, congratulations on the financial savvy, that decision. Can you say a little bit more about the costs going forward? You know, you've turned a lot of those 300 million ounces of, I guess, initially mostly inferred into higher confidence. You're putting them into production. We see the growth coming. But people are very concerned about the costs coming up on us. And you did just address that in a slide fairly well. But you know, on the ground, you know, how can you project and I guess maybe say a little bit about security in Mexico? People are concerned about that too.
In the news release that'll go out in the morning, and I could talk about it now because obviously the stock's halted and it will be won't be trading until after the news is out. But our costs on an annual basis got up 9%. I think that's probably one of the lowest in the industry. Our cost on a gold equivalent basis is about $365 an ounce, which is pretty good. Yeah. You know, I think it's going to. We've done good at keeping costs down because of throughputs. Are we increasing our throughputs? The strategy of First Majestic has been to develop old Spanish mines, basically, and develop the resources. First drill for them, explore for them, develop them, and then as the mine was developed, we would then build the mill, and then as we develop more ounces through exploration and development, we then expand the mills, and that's. We basically just rotate around all our operations, and every second or third year we expand one of our mills. And it's worked out. It's been a great strategy. It's worked out very well for us, and that's kept our costs down because throughputs are always increasing. Technologies are advancing at the mills because we're always replacing old equipment with new equipment, and we don't have the expat factor, which is a big factor. And I think a lot of people discount that. But
can you say specifically how the costs have come down in San Martin? Can you give us a percentage?
Yeah, we're going to see that in the next couple of quarters, and I can't give you a number actually because we're just about to witness the costs.
That was the highest cost operation, right?
It was, yeah. It's close to $12 an ounce, that one, compared to La Encantada at $7. So, yeah, we've just redone the union contract at San Martin as well, which we think we'll replace an old 20-year-old contract with a more advanced contract that we think is going to be good for the workers, but also good for us as well. But also the furnaces I mentioned, and we're this year in 2012, we're going to replace the mechanisms and replace some tanks and so on and so forth. So I don't think you'll ever see San Martin get below $10. Unless we have a major discovery and the throughput can be increased or the head grade can be increased, because it is our lowest grade operation. But to get $1 off the cost there wouldn't be you know, difficult. I don't think that difficult.
Okay. The big question I get from our readers is, you know, Pan American just bought Minefinders. When's the next M&A deal coming for FR? The organic growth is great, but people want to see a blockbuster. They want to see a game changer. They want to see something change, shake things up. Is that possible, or watch the space, or?
You're not going to see a deal like that at First Majestic, I don't think. You know, I'm one of the largest shareholders, and you know, our team is very focused on its plan, and we're also very focused on staying as pure silver as possible. Most of the assets that we looked at, and we've looked at many, and we looked at Minefinders, it throws our percentage of metal too far off. And I think one of the reasons why our multiple is where it is, and why we're respected for who we are, is because of the fact that we've kept as pure as we are. And I remember I put First Quantum together, as many people know, and the reason why First Quantum went from $8 to $140 a share through 07 through 08 is because there was a flush of money that went into copper because copper went through $4, and there was only very few pure vehicles for copper, and all the institutions just rushed into those very small group of vehicles, and it was very profitable and so on and so forth, low cost and all those things. But and I think the same thing is going to happen with the silver space. You know, I think when you see silver go through $100 an ounce, which I'm sure it will, and higher, you know, when the ratio of the gold to silver gets to 20 where it should be, or even lower, and you smile. But
I'm not arguing.
I'll put money on the table. That's going to happen. But and I do have money on the table, obviously.
Yeah.
But when that does happen, you're going to see a flow of large amount of cash going into these silver equities, and there's really not too many. So, you know, you got maybe 5 or so, you know, equities that are really going to have the brunt of that benefit. And
how much FR does Sprott own?
About 4.8 million shares. They're second largest shareholder.
Mayor, do you have questions?
And on the security issue, because you did ask that, you know, we think it's peaked out. We actually are very optimistic that it's not necessarily coming to an end, but it's definitely peaked, and there are resolutions in place that are being worked on. You know, unfortunately, we do spend money on security, and I think both you've probably witnessed through your site visits that, you know, we do have a good security force in place, and we do protect our people very well. Whether we need it or not is another issue. We haven't had any major incidences, but we do it to protect our people. We want them to come to work every day and feel safe, and so on. But I do think it's going to be, I think it will get better. You know, what we're witnessing is the wealthification of a nation. And, you know, you see these small towns, and Little Prairie is a good example. You know, you see when we moved into that town had a population of 300 people. It was a ghost town. And there was no one that lived in that town between the ages of probably 12 and 65. And, you know, they all lived in the United States or big cities in Mexico. And we move in there. Today there's 2,000 people that live in that town. And a good brunt of that population is young people between the age of 18 and 30, males. And what do they do with their money? You know, they've got extra money in their pocket. So it goes to booze, women, and drugs. Unfortunately, that's the case. So this, you know, so the drug guys move in, and they fight over that region, and you know, someone wins, and calms down, and you know, the mine survives because that's their source of revenue, and the drug guys survive because obviously the people want to buy drugs. But over time, after education, it's not new anymore because it is new. These people have not had money in their pockets the way they do today for their lifetimes. So and it takes a while to correct the situation, but after a generation or so where drugs in the environment is not new as it is today, it becomes somewhat ignored, and drugs actually, the use of drugs actually start to drop off, and then the impact on society actually lessens over time. So we will see that in Mexico. I'm optimistic, but it's something we have to live with in the meantime and work around.
Okay, thank you very much.
Okay, thank you.